What's up, YouTube? It's Kenny again. Wanted to make a video about taking profits and taking losses and how to do it gracefully, all right? First of all, I'm not a financial advisor. I'm just a truck driver driving across the country researching and trading stocks, and I will not be held responsible for any moves you make in the stock market. I'm not your mama, all right? Mash on that subscribe button for me. Mash it. Hit that like button and let me know, how you go about taking profits. So I got some examples that I'm going to go through in this video, but a situation that happened today, actually, the examples that I'm going to give are the reason that I decided to make this video. All right. So profits are profits, guys. Green is green. All right. I'm a swing trader mostly. All right. I have some long-term stuff in another account, but most of what I do is swing trading. But what I'm going to talk about is applicable no matter what you're doing in the stock market, okay? So I talk a lot about stair-stepping my account, and that's how I built it up, is by taking stair steps. A little bit here, a little bit there, a little bit here, a little bit there, and the next thing you know, you've built up a pretty good return, okay? So I want to stress that you should be taking profits. Like if you're a swing trader, you cannot fall in love with these stocks and think to yourself, oh, it's going to go up more, or oh, it's going to come back up. It's going to come back up. You have to set rules and limits for yourself and follow those. And it's not easy sometimes. And I see a lot of people who get themselves beat up because they don't do that. Okay? And it's not the easiest thing to do. Sometimes you will kind of fall in love with the stock, and you will want to tell yourself it's going to come back up. Okay? So let's look at some examples, of why I say to lock profits in. Okay? There are times when you just nail it right on the head, and you look back a couple days later, and you're like, man, I did really good on that. I'm a bad motherfucker, or whatever. You know what I mean? But then there's times that you sell a stock and you look back on it the next day or a couple days later and you're like, man, that went way up. If I would have just held that, I would have made a lot more money. Okay? You cannot allow that to affect you mentally on your future trades. Okay? You have to be Spock. You have to be logical. Green is green. Profits are profits. And here's the examples, okay? HOL, all right? I took profits on that one yesterday. It was about a $253 profit, I think. So I had wanted to make at least $200, okay? When the stock got up over that, I started looking for what I felt like was a top, okay? When it hit $22, I put a trailing stop loss at 2% on it. So what that means is if it drops 2%, then it'll sell it. So if it would have dropped 44 cents, it would have sold it right there. But if the stock keeps going up, then if at any point it drops 2% from the highest place it went, it'll sell it. So you kind of protect your profits, and if the stock goes up, you'll make more. And that's what I did with it, okay? Now I look back at that stock today, and it's trading around $19. And I'm like, man, I just really nailed that. I'm a bad motherfucker. I hit that just perfect. You know what I mean? But SunPower, I bought at 44. It went down to 40. Came back up. I sold it for about an $88 profit. Okay? Planet 13. I sold it for about a $90 profit. Okay? I go back and I look at those today. SunPower is trading like 49. Planet 13 went up almost to 7. So I would have made, another $120, $130 or whatever it is if I would have stayed in there until today. But I don't look back at that and say I lost money, because I didn't lose any money. I won money. Okay, I made what, 8, 8, 16, I don't know, about $180 off of those 2 trades yesterday. Just because that stock kept going up, that doesn't make me change the way I feel about my next trades. All that does is reinforce my strategy, because I made money. Those stocks could have just as easily gone down today. Okay, I don't have a crystal ball. You don't have a crystal ball. Profits are profits. When a stock gets up to a point where you're pretty comfortable with the profits, or maybe like I was yesterday, you just feel like today's profit-taking day, I'm going to get me a stair step. You just got to be happy with that. I don't look back and see more money that I could have made yesterday. I look at yesterday and I say, I made $400 yesterday. Could I have made 7? Maybe. Maybe I could have lost a bunch of those profits and made 3. You know what I mean? Or 2. But all I know is I took a $400 stair step yesterday. All right. Now let's talk about taking losses. Okay. BNGO. I sold that yesterday for a $30 loss. I had been down as much as about $80 in it, and I had been sitting in it for quite some time. Well, to me, like 2 weeks I was in it probably. So when you're looking at taking losses, okay, you can't fall in love with the stock, right? I like BNGO now. I used to not like it, but I think that it could double this year, okay? But I'm not hanging out in that stock, wasting my time. I'll just take the loss. And so I just took the loss, and then that leaves me, $800 that I can put somewhere else and try to make some money, instead of waiting on that, sitting there, just dead money because it's down, okay? And the point is the same thing. I don't have a crystal ball. That thing could have gone down further. So I was down 80 when it came back up, and it wasn't acting like it was going to go up above that. I just took the loss, guys. And you have to set rules for yourself. My rule is that if a stock drops 10%, I'm looking to sell it. If it's a stock that I really have a bullish thesis on, I might let it go to 15%, okay? But I'm not falling in love with any of these stocks. I don't care what stock it is. If it gets down towards me being 10% down, I'm looking to sell that motherfucker before I get any further in the hole, okay? I got one right now that I fell in love with a little too much, and that's CLII. And I still have a bullish thesis. I think that stock is going to go on a run up to 30 or 40, okay? I believe in that. I think that's going to happen for sure at some point. But it's down some more today. I'm down like 8.5% or something like that. And I'm thinking about selling it. Like if it drops down to 10%, I may let it go a little bit further than that, but not much. Like I will sell that motherfucker. I don't care. Like I don't care how much I love the stock, how much I'm just positive that it's eventually going to go on a run. If that stock starts really losing me money and it's sitting there too long, that's a bunch of money. I got 100 shares of it. I got like $2,100 in that stock. And the longer I let that money sit there, just being dead money, and it's down, the longer I let that money just sit there, that money is not making me money. So I'd rather just cut the loss and move on to something else, okay? Now, let me tell you this. I could sell that stock. I could sell that stock down 15%. If it went down and I sold it 15% down today, I would still be up because I took $400 worth of profits yesterday. So even though I would have had a downward stair step, the upward stair step was bigger. So this is what I mean by mitigating your losses. You want to keep your account moving up, and sometimes you will have a stair step that goes down. There may be weeks when you have 2 or 3 and you get down further. But over the long run, if you stick to your rules, if you make rules for yourself and you stick to them, over the longer term, most likely you will keep stair stepping up. At least that's the way it's been for me. Okay. Will it always be that way for me? No, probably not. I'm sure it won't. You know, I will take bigger losses sometimes. I have in the past on penny stocks and stuff. Back when I first started, I took some pretty big losses. It took me a long time to crawl my way back from it. Okay. And I'm sure I will take some bigger losses in the future. Sometimes shit happens real fast. But by setting these rules for myself, I mitigate those losses. You know what I mean? I had somebody comment on the video yesterday, you should have held BNGO. Well, you know, I could have held it, and the truth is, it came back up today some, and I could have got out in the green, or I could have still been holding it. But the point is that I'd rather just cut the losses when I've been sitting on something for what I feel like is an extended period of time. I'd rather just cut the losses, use that money elsewhere to try to make some money. Okay, I'm here for the money. I don't fall in love with these stocks. All right, Hyliion is probably the one that I like the most. Okay, and if it goes down 10%, I'll be looking to sell it, guys, because I don't break my rules. If you know, you make the rules for yourself and you stick to them. So I'm sure I rambled, guys, but I really wanted to hammer this point home. Okay, profits are profits, whether it's $3 or $3,000. If you sell in the green, you're stair stepping your account upwards. And if you limit the amount that you can lose on a stock by watching it and setting rules for yourself, you can keep your account moving upwards. Okay, and I don't care who tells you that ain't right or whatever you think. I don't really care, because I'm right. I'm fucking right. If you do it this way, you'll win. Right? Most, you know, as long as you're making good decisions on what stocks you're buying and you're waiting on dips and buying them in the right spots, okay, you can be successful doing it this way. And you know, there's going to be people who are going to come in and comment and say that I don't know what the fuck I'm talking about or whatever, but, you know, I don't really care. I'm telling you that this works. So, thanks for watching. I appreciate all of you guys' support. Mash on that subscribe button for me if you're new. Like the video, and let me know what you think about what I've just said. Thanks for watching.